Imagine it's 2026. The crypto world has changed, and one coin is making moves that could redefine global finance. We are talking about XRP, and specifically, its plan to bring two of the world's most valuable assets onto the blockchain, gold and oil. So, how is this happening? Ripple, the company behind XRP, has officially launched features on the XRP Ledger designed for tokenizing real-world assets, or RWAs. They've explicitly mentioned gold and oil. The goal is simple but revolutionary: create digital tokens that represent ownership of physical gold reserves or barrels of oil. This would make these massive markets tradable 24/7, easier to transfer, and usable as collateral in a way they never have been before. This isn't just speculation. It is a core part of the XRP Ledger strategy to become the go-to blockchain for institutional finance. Now, why is 2026 the year to watch? A few major things have fallen into place. First, let us assume the long-running legal battles with the SEC finally wrapped up in 2025. This gives XRP something most other cryptos dream of: regulatory clarity in the United States. Institutions hate uncertainty, and with that out of the way, the doors for big money are wide open. This leads to the second point, the Wall Street kit. Following that legal clarity, we'd likely see the approval of Spot XRP ETFs. Just like with Bitcoin, these ETFs would make it incredibly easy for pension funds, hedge funds, and everyday investors to get exposure to XRP without the hassle of private keys and crypto wallets. This creates a steady stream of buying pressure that simply didn't exist before. XRP is finally becoming the banker's coin it was always meant to be. The third pillar is the tokenization of assets we just talked about. Why does this matter so much for the XRP token itself? Think of it this way. If a bank in Japan wants to trade tokenized Saudi oil for tokenized Australian gold on the XRP Ledger, they need a fast, neutral bridge asset to settle the transaction instantly. That's what XRP is designed for. It's the digital lubricant that makes the entire RWA engine run smoothly. We are already seeing pioneers like Meld Gold bringing tokenized precious metals to the ledger, proving the concept works. Next up is Ripple's own stablecoin, RLUSD. Launched in late 2024 or early 2025, this fully compliant, US dollar-backed stablecoin is a game-changer for the ecosystem. It attracts traders and liquidity, making the XRP Ledger a more attractive place to do business. While RLUSD handles stable value transfers, every transaction still requires XRP for gas fees, and XRP remains the premier bridge asset for complex, cross-border swaps between different currencies and tokenized assets. Finally, we have the bigger economic picture. By 2026, many analysts expect the Federal Reserve to have lowered interest rates. Historically, when interest rates are low, money flows out of savings accounts and into risk-on assets like stocks and crypto in search of better returns. This cheap money environment, combined with the natural crypto market cycles, positions 2026 as a potentially massive bull run year, and XRP could be a prime beneficiary. However, a smart investor always looks at the risks. First, there's the cannibalization risk. Some critics argue that if banks primarily use the RLUSD stablecoin for payments, the demand for the XRP token itself might decrease. Second, centralization concerns haven't gone away. Crypto purists often point out that Ripple still holds a large amount of XRP in escrow, giving the company significant influence, unlike a truly decentralized asset like Bitcoin. And finally, there's fierce competition. Blockchains like Ethereum and Solana are also in a heated race to become the home for tokenized assets. If a giant like BlackRock decides to build its tokenized funds on Ethereum instead of the XRP Ledger, it would be a major blow to XRP's value proposition. So, here's a quick summary. You might consider investing in XRP in 2026 if you believe that banks and financial institutions will inevitably move their operations onto the blockchain, if you value the legal clarity that XRP has in the US, and if you're bullish on the idea of tokenizing everything from gold to stocks. On the other hand, you might avoid XRP if you prefer fully decentralized, community-run projects, or if you're concerned that stablecoins could make the XRP token less relevant over time. The future of finance is being built right now, and whether XRP becomes a cornerstone of that new system is one of the most exciting questions for 2026. What do you think? Let me know in the comments below. Thanks for watching, and don't forget to like and subscribe for more deep dives into the world of crypto.